You're hot. You're ready to go.
Good morning, everyone. Good to see you. Good to be here. During the prize class today, I'm looking forward to listening to Byron, who's going to talk about seed and harvest as it relates to finances. And looking forward to that. So let me open in prayer. Father, God, we love you so much. Thank you for every blessing that you've given us, for the adversity to build businesses and to build income. And what it's teaching us, what it's taught us, help us not to miss that. We thank you for Byron. We thank you for his diligence in his work and what he brings to us today. Help us to hear your message. And we pray in your precious name, Lord.
Amen.
Byron?
Thank you so much. Good morning.
Good morning.
Hey, I have one of my favorite quotes on the screen here from Mr. Tom Hopkins. Are you guys familiar with Tom Hopkins? No? But this is a universal answer he has up there, but he says, how's business, right? And no matter where you're at as entrepreneurs in your particular business, your field, you can always answer that question with unbelievable. Because it can be either way. Business could just be like hand over fist, or you can be doing these things, right? And so yeah, that's one of my favorite quotes. Yay! So obviously, it's all about mindset. Typically, as entrepreneurs, we want to talk about our goals and our mission and our vision, of course. And sometimes you have a bad week. I would say this week was one of the probably worst weeks in my business, believe it or not. And I'll tell you why. And I'll talk about it for just that long because you got to keep pushing. This week I had 2 agents, licensed agents, they're actually licensed, resign and go to different firms. Right? But I also had a new licensed agent pass his exam same week, right? So it was a 2-for-1 deal. 2-for-1 deal. So these are one of the guys I've known since I worked with Janelle, believe it or not, military, active duty. But the young man that passed his exam this week, his mother is actually in the same field and works for a pretty big company. Awesome. And is behind him, right? And so it all balances out, right? God will purge people out of your business and add to, right? And so keep the faith and stay strong. So in your business, when we say how's business, unbelievable, right? And keep the faith, stay strong, right? Stay strong. And so this is one of my favorite cartoons. Who grew up on Batman and Robin?
Oh, yeah.
Hey! Right? And so we've also had agents leave the field and go right back to the 9 to 5, right? I'm gonna go get a 9 to 6, I'm gonna save 4, and Batman says, whack, what are you thinking about, right? No one ever became wealthy, right? On a 9 to 6, you gotta be an entrepreneur. So we talk about all the time, mindset is everything. And so I want to show you a short clip of somebody who keeps it straight. He's very, very wealthy, but he tells you what's going on in our society. And it's called They Want You to Be Poor. I don't know if you guys have ever seen this little video, but allow me to share it. Check out this video.
School system would actually teach you. The school system will never teach you about it. The school system I can teach you or a doctor or a lawyer, a specialist, but never about money. My father was the head of education, PhD, and all that stuff. I go home and ask him, so why do I learn about money at school? And they looked at me and said, because the government doesn't let us teach that subject. Government tells us what we can teach and what we can't teach. I thought that was strange. I said, but why are they going to school to learn about money? But no, your job is their job. Poverty is passed on. It's taught in the family. The middle class is top of that. And so the people right now who are sitting at home, who are struggling financially or worried about money or unhappy that they're making a lot of money, but unhappy with what they're doing. It was probably taught. And the super ego was taught, get a job, work hard, or you'll never be rich, or rich or evil, whatever.
Until you change your mindset, the money won't help you.
Correct.
And we see that when people win the lottery, people that make more money, they still have the same problem.
Right.
Because they have that poor man's soul.
Right. If you're poor, you'll always be poor.
It's really hard. for people to understand.
Yeah, the money will disappear that fast. That's like most pro athletes, they make millions of dollars, and with 65% are bankrupt 5 years later. Because you have to come from poor back. You tell them that, they get very angry. Just a rich, you
Oh,
guys
why is
ripped me off. Government ripped me off. But unfortunately, what Mr. Lecter was saying, it's passed down genetic. The moment I pay you think like an employee, that's the trap. Entrepreneurs work for free. Well, they accept a paycheck, the brain is dead. As long as you're hungry, you'll think. You see, people say, well, why don't you make it for money? The only problem with that is just creates more poor people.
Or the man of fish, he fishes people that grease.
Yeah, you give a man a fish, you get a lot of people a lot more fish. But you teach them to fish.
But you want to run the knowledge, because I see giving this knowledge out, and do rich people cringe and say, don't tell them that.
Yes. Don't tell people. People will always be honest. It's in their words, and the words become flesh. When they say, I can't afford it, or I can't do that.
So you guys kind of understand what we're doing here, right? It's about a 5-minute video, but mindset is everything, folks. Mindset is everything. So we talk about this and so wanted to share that video with you guys. A lot of times it's like in my profession, we lose a lot of people. We do. Since the company's been around, they've recruited over 1 million people, believe it or not. Today, in our same company, between the United States, Canada, and Puerto Rico, 60,000 licensed agents. 60,000, right? Out of over 1 million in the last 20 years. And so mindset is everything. If you're going into entrepreneur, you got to build it. You got to work that muscle, right? It's a muscle. So I want to talk about 2 questions here. We talk about it's not how much you earn or save, it's how much you keep. Anybody remember growing up hearing that when we were young? You know what I mean? When we was running up to the ice cream truck, right? Can't get ice cream for $1 today, can we? Right? Definitely not now. But and then common sense, business sense is one of the phrases our founder talks about a lot. And a lot of folks don't go into business because they don't understand the mathematics behind it all. It's all basic math. It's not trigonometry, algebra, and all that. It's basic math. And so I'm going to talk about seed and harvest. This is one of my favorite topics because it's always overlooked because we're so busy with work and kids and family and T-ball and all the other things that are thrown at us. But you look at this, if you went into Lowe's today, and you purchased a bag of watermelon seed, right? You see it sitting on top of the paper. You have to think about your money and your harvest that you're building today, right? Long term, 20, 30, 40 years out. Do you want to pay taxes on the way to that one little tiny seed today in a very low interest rate and tax rate? Or do you want to pay down the road of that harvest when you got vines that are spread down with watermelons on? Do you want to pay the weight of that in taxes? And so this is why millions and millions and millions of people are back at work, believe it or not, guys. They've come out of the workforce and they've returned back to work. They've come out of the workforce and now they got to find new streams of income because they didn't see down the road, because it wasn't talked about. And so let's get into this seed and harvest. So I drew out a timeline here. We do this all the time on the yellow pad, everywhere I go. When we talk about, let's look out 30 years. Let's say you're just saving $300 a month, right? $3,600 a year. So it's 2022. We're going to throw out a 25% tax bracket, right? And you're that one person that knocks it out of the park. Where you saved your money, compounded it, and you got to the $1 million at the end of the 30-year rainbow, right? And at year 2052, you're still at a 25% tax bracket, right? During your working years, what you did was you postponed about 900 annually, right? If you look at 3,600, you slice it up in four, right? Put it in 4 blocks, that's 900 bucks. 9 times 4 is 36, just to make it easy, clearer. So you're saving about $27,000 deferred over a 30-year period at those rates, right? That's it. You deferred 27,000. During your healthy, strong, vibrant, you're in your peak performance years, you're writing off mortgage interest, you got the child tax credit, right?
Yeah.
You got your qualified plan distribution, so you're falling down into a lower bracket, things like that. And then you have your business's expenses. Most people have more than one. And so you're delayed, right? I use that word delayed. We talk about you postpone those taxes, you put them off, you procrastinated on them. Anybody ever had like a toothache? You know you need to go see right, but it's going to be painful. And it's really hard to paint this picture until you sit down and start writing out the math. And so let's go to the next slide. Remember, all your write-offs you had for the last 30 years, right? You postponed 27,000 in taxes. You're at a 25% tax bracket, just for example. Now you get the $1 million, right? You get to retirement. Let's say you need 60% of that million, right? 60,000 or 6%. Now you're going to start paying back what you postponed, that big fat nest egg, that big watermelon. 25% a year. So you say, hey, I need 60,000 bucks a year. I'm taking 6% off that 1 million, right? At 25%, you don't get 60 grand, you get 45. Because you got to pay 25%. And that's year 1, and that's year 2, and that's year 3, and that's year 4. And it goes on and on until you die or you run out of money. And this is what's going on in this country right now. And it's been going on, and it's about to be surge right now. From year 2022 to 2029 will be the biggest year of retirement. And the federal government knows it because they issue those social security cards.
Yep.
And they know how many people were born, right? And so it's going to be a wave of people going into retirement and coming right back to work, right? And so if you look at what they did when they changed with the CARES Act, and they changed the R&D from 70.5 to 72, everything's strategic, right? They know what's in the coffer already that has not been taxed. And so they push it out, and they're probably working on pushing it out some more, right? And they're looking at letting everything compound. God knows we don't want the market to crash. That would just be even more on top of the bad problem already. But what I've been hearing is that this inflation is not going away this year, and probably not next year,
Right.
and probably not the next year. And it's just going to eat people's money up.
Yeah, I mean, and that the inflation is.
Wait.
Our leaders have just printed money, and it's gonna come home here. That's just terrible what they've done. And they can't put the toothpaste into the toothpaste dispenser. It's not gonna happen.
Right. And so there's trillions, guys, trillions in untaxed wealth sitting in all those accounts that don't have any tax protection, right? And so obviously on the streets, everybody knows about Roth IRAs. Everybody's got a Roth IRA, right? But most of the things that have been distributed to the consumer over the last 40 years have been the ones that are going to get taxed. I always say, think about this. They say, Roth, you can only put in about $6,500 a year, but then they say you can put 20,000 into a 401k.
Yeah.
Right? Do you notice the difference? It's like,
Yeah.
why would, right? So then we have to teach people, okay, well, what are these celebrities doing? And these politicians, what are they doing? And what are these athletes doing? They make millions. Where are they putting their money? And we've already had this conversation about 10 times, right? But this is bad, man. And I remember I was on Coronado at the Panera Bread on, I guess it's Orange Avenue, on Coronado, and a lady was waiting at the table, and I had to ask her. You know what I mean? She was definitely over 70. And I said, ma'am, can I ask you a question? Why are you working? Taxes. I'm not making this up. God is my witness. She said taxes. She had to come back to work to make up for that gap, right? That gap, and it hurts, and it's not right, and it's not funny. And that's why we exist. So what do we teach, folks? And you guys have seen this slide before. We teach about that IUL, right? It's about what are you receiving in return for the money you're putting out, right? And we go down this list. When we go down this list, we want people to be more informed and know that these things exist. I didn't bring my books today because normally I bring out books, brochures, but you have to ask yourself these things. And we put these green check marks, red X, just so you'll know, right? At distribution, when your body says, I'm done, and your mind says, I'm done, right? Do you want to pay taxes or do you want to not pay taxes, right? You want that money distributed to you and your family so you can enjoy life and do everything you can with that money, right? That's why the Roth is very popular, but they don't really allow you to put, so much into it. They cap you. But in IUL, there is no cap. It's based on how you want to set up your program, right? Growth potential. All of them can make you some money. Obviously, we do not make money in the bank. We actually lose. We don't argue that, right? Would you agree with me? And then the risk of loss. Banks will insure. So then we teach you, where do banks put the money? Because banks say your money's insured. Where are they putting the money? It's not the guy that's coming out with the bag that's jumping in a Brinks truck. Wile E. Coyote and Bugs Bunny cartoons and all of that. That's not where the money goes. They put that money into insurance. So cut out the middleman and go get the interest that the banks get. Right? That's what we teach you to do. That's what that IUL is. Obviously, you don't want to lose the money. Ease of access. Most programs, 59.5, you can finally touch the money. But in IUL, it's liquid. If you build up the cash value, you can borrow from yourself. Tax-free, 100% tax-free, no penalties, right? That's called liquidity. Obviously, the insured piece is big. Living benefits. We have to teach everybody about living benefits. Indexed universal life, IUL. And so it's a permanent life insurance. Most people only know about whole life, right? Because that's been mass pushed out into society. It's been around for years. Whole life is permanent as well, but it's like, we market them too, so I don't want to say anything bad about them, but it's like iPhone 1, iPhone 15, you know what I mean? As far as the design, right? But whole life is good, it's permanent, it's still cash value, but it has a level of death benefit, it never rises, right? And then the interest you can earn is lower. The index universal life. In critical and chronic illness, these living benefits are powerful. I think I talked the last time I was here a couple weeks ago. We talked about accelerating your death benefit, right? When life happens, you can accelerate that death benefit. You don't get that in most terms. There's only one term out there, and I believe I have it on the slide. Our company just got Forbes 2022 term of the year because of the living benefits, right? And that's from Forbes Advisor. But the long-term care benefits, you have to pick either or. And here's why. Because, for example, when it comes to critical and chronic illness riders, you can have both, right? Now, you can have long-term care and critical illness, but you can't have the chronic because it kind of covers the same thing, so they market them separately. And then, obviously, when you pass away, you want to leave a legacy, right? There's no benefits in any of these other than the IUL. And then, obviously, I think Greg talked about it about a month or two ago. We talked about probate. We want to avoid probate. We want our family to get what we say that you get. We don't want anyone intervening with our family and taking money from our family. So that's the big deal about these IULs. And I can send you videos and brochures and things like that. And so I was just talking about this. Transamerica received the best overall term life insurance in America, and it's because of those living benefits. I have a video I'll click on right here. It's all about, like I said, when you're exchanging money, what is your family going to get back in return? What are you getting? Because most term insurance in the industry pays out after you die. You don't get any benefits while you live. Not here. And this particular term covers all three: chronic, critical, terminal. It accelerates your death benefit while you live. Absolutely. Absolutely.
Say because they're
trying to feel from this, how much I was doing. Don't they know about this?
Absolutely.
They do.
It's
Are
heavily
you trying to
regulated,
stop
right?
it?
No, because it's about providing the consumer what they need. Most terms just count at debt, and you don't think about it because on your job, you're paying $5 a month, or 12 months a month, or 18 months a month, right? This term is a little bit more. Maybe you're paying, instead of paying $12 on your job, you're paying 19 to have all the benefits. You have to weigh it out, right? What makes more sense for you, right? And so, yes, the government knows about it, and let me spin this video for you guys, right? Really. And so, we gotta get families educated, get them informed, and make sure they have what they need in their portfolio, right?
A Transamerica Life Insurance Company production. Behind every trend we see, there's a leader, someone who steps forward with a new idea and brings it to reality. Others will eventually follow the trend, but it all starts with the trendsetter. Welcome to Transamerica, where we've been setting the trend since 2006, when we introduced a new type of life insurance offering a new level of security. Life insurance with living benefits. In Transamerica, we believe that not all life insurance is the same. Most life insurance policies pay out only upon an insurance death. With Transamerica's new Trendsetter LV series and innovative Term 5 series offering traditional death benefits with living benefits included at no additional premium cost, you can offer your clients financial assistance during their lifetime if they suffer from a critical, chronic, or terminal illness. It's one product offering one convenient solution to life's unpredictable challenges. Critical illnesses include heart attack, stroke, cancer, end-stage renal failure, major organ transplants, ALS, Lou Gehrig's disease, blindness due to diabetes, or paralysis due to permanent loss of use of 2 or more limbs. Chronic illness is defined as being either severely cognitively impaired or the inability to perform 2 of 6 activities of daily living for a period of 90 days, including bathing, continence, dressing, toileting, self-feeding, and the ability to transfer without assistance to another person. An illness is considered to be terminal if the insured is expected to live less than 12 months. Experiencing a critical, chronic, or terminal illness may lead to increased expenses and decreased income. Once your client's expenses are higher than their income, they begin creating debt. Life insurance with living benefits offers the insured access to their benefits when they need them most, helping to fill the gaps that health insurance policy may not cover. Deductibles, co-pays, or other health-related costs, as well as non-medical living expenses such as food, mortgage, and car payments. Consider this: 48% of businesses that fail because of a critical illness. 60% or more of all bankruptcies are directly tied to medical conditions such as critical illnesses, and around 80% of those individuals were already covered by health insurance. With the Trendsetter LV series, a devastating illness or injury doesn't have to be financial ruin. Trendsetter LV series also offers important product advantages. Non-medical up to $249,999 up to age 60. Only underwritten $250,000 to $999,999. Age last birthday. Minimum face amount $25,000. Maximum face amount $999,999. Lifetime benefits can be accelerated for any insured under all accelerated benefit riders up to a maximum of $500,000. 10, 15, 20, 25, and 30-year guaranteed initial level premium periods available. Trendsetter LV series, a term product series that focuses on the life in life insurance, offering cost-effective term life with benefits that can be accessed when the insured needs them most, all in the convenience of a single policy. Life can be unpredictable, but you can be confident that Transamerica will be there when you and your clients need us most. With a long history of Trendsetter product innovation, you can count on Transamerica to continue to provide products designed to better help protect you, your family, and your financial security.
Big deal. This is a big deal. Like I said, since 2006, this product has been out. no one knows about it, and I always talk about when I come here, there's a distribution gap, right? The problem is distribution, right? Building agents to go out and share this information. We just don't have them. I mean, there's 80 million people in America, and we're 60,000 strong, representing Trans-America through WFG, World Financial Group, right? And so World Financial Group is the only company that markets this. So that's all we have in the field, right? And it's an honor to be associated with a company like this that's putting out billions. I think in 2020, over 49 billion between benefits, annuities, and life insurance, right, payout. And so this is a big deal. We want folks to know about this, especially entrepreneurs, because you have so much at risk, right? Yes, ma'am.
So when is the best time to obtain this type of insurance? Because I'm over 60. So when I think of this insurance, I'm thinking the better time to really get this type of insurance is when you're younger.
Yes.
So explain that to me.
Well, because this is a term product, right? You gotta calculate out, estimate, how long you wanna pay premiums. Because this is not a cash value product, right? It's not permanent, it's not whole life, it's not IUL, but the benefits will give you a little bit of peace of mind, right? When life happens. So if you're 60, do you wanna go out to 80, which would be a 20-year term, right? They may go up to 85, so 25-year term. But the best time to have it, we always say, was yesterday, right? And then the next best time is today, right? And that's not being salesy, it's just being real, because you don't know how life will, right, happen every day. But it's just a matter of what needs to fit into your portfolio, need to be changed or upgraded, right? Things like that. The beauty about this particular term is it can be converted after year 1 and before year 6 to permanent. So if your budget doesn't allow you to fund a permanent policy, you can convert this after year 1 to an IUL, literally, right? And then you still get the same benefits, chronic, critical, terminal illness.
Okay, and if I understand it correctly, you can also borrow against it.
Not this one, the
Not this
IUL, the IUL.
The IUL you can.
That's a totally different policy.
Okay.
But the good thing about this particular term is it's indemnity. So most folks are familiar with reimbursement, like long-term care, you gotta fill out a packet and prove your receipts and blah, blah, blah. And then it gets reimbursed, right? That's not that. I have pictures and pictures and pictures of checks that have been mailed out to our clients, right? In hundreds of thousands of dollars.
Byron, can you compare this to the IUL? Just do a comparison.
Well, we can, it's just, I wouldn't say light years different, but the main thing is for the benefits, they're almost identical because they both have chronic, critical, and terminal illness riders, right? That are included. The difference when we start talking IUL, we're talking about you building your family bank. So you're paying premiums, it covers all your life insurance. Life insurance is the actual chassis, right? It's the wagon, the life insurance. And then inside is your cash value on IUL. So some of your premium is going to life insurance, and then the rest is going to be cash value, right? It's building your liquidity, it's tax-free money and stuff like that. So you can live your life and have that supplemental retirement without worrying about being taxed on the tail end, right? And so Congress and the Senate, they kind of know that for our citizens who say, I'm in charge of my life, I don't need a lot from you, they kind of give you benefits, and it's been marketed through life insurance since 1913. When the federal income tax came to be, and the Treasury Department came to be, and taxes came to be, 1913. It's a really good year to go check out and kind of understand what happened. And so for wealthy people back in 1913, when Woodrow Wilson was our president, Woodrow, wealthy people said, well, you don't mind paying taxes. What's in it for us? What can you do for us, right? And Congress came up with that IUL. It wasn't called IUL back then, but a tax code for insurance, 7702 subsection A, right? And it's just been done and done and done for years. Yep.
How long can you take a term life insurance policy? Somebody mentioned earlier, I'm in my sixties. So I couldn't be taking term policy for 40 years to cover me to 100, right?
Not this one, but there are companies, believe it or not, they have some that are going past 30 now. Believe it or not. And it's really, they want to hold on to that consumer, right? If you've been with them 29 years, some of them are starting to stick it out, add another 10 years. And I think part of it has to do with a lot of firms they're starting to get their fingers slammed in the door, right? Because I had an auntie who passed away in 2020, not for COVID. She had a stroke 15 years prior, and her policy lapsed like 16 months before she passed away. Oh, right. And it was a term, and she was in her 80s. And so that's where you have to do the math, right? You think out, okay, commercials teach us to go for cheap. Just find the cheapest thing, low rates, right? You see the commercial, I see them. And I just sit there and go, oh my God, these people don't know what they don't know. Okay. And I'm not afraid to say this, honestly, like I'm being serious with you, because we keep changing jobs, we keep doing this, that, and the third. It's over 90%. I want to say it's over 95%. Don't pay out those terms, right? People get policies and they quit, and they get policies and they swap jobs. And they get,
Can you repeat that?
What you're saying is people buy policies and for whatever reason, they never end up paying out. Either they switch jobs, stop making the premiums, or the term life lapses.
All of that.
So you said 90% never pay out?
Never. Not good, right? And it's because, it is because if you think about it, the commercials are telling you to just buy $5 insurance, right? So you buy $5 insurance, you pay it for 20 years. And then 20 years come and you're 20 years older and you got kidney failure and you got all these problems. And you say, hey, I've been with you 20 years. What's my new premium? I said, well, you're 20 years older. You gotta get labs, you gotta do blood work, right? Come check your blood pressure. Yeah, that's like $1,500 a month. I don't want insurance. I don't want any insurance, right? And that's what happens over and over and over again. So our goal here, that's why what's beautiful about this one, and other ones do it too, other companies do it, you can convert it to permanent, right? Permanent, right? And it's a matter of what we do is we help people find their premium. If there's a shortage of premium and people say, man, my money's really tight, we look to help you find a premium. You know, it could be just your Starbucks budget could make the difference, right? You're paying $5 a day in Starbucks, and okay. And so we help you, right? What we want to do is sit down with you. Like I said, what we do is it's free. It's called a financial needs analysis. But the main thing we teach you to do is write out your dime. It's an acronym used across the industry, dime. How much debt you have, what is your income annually times 10, especially if you're married, income times 10 years, what's your mortgage balance, right? And then any expenses, that's what the E is. For example, we have sandwich family, grandpa in the house or grandma, a married couple, and kids. That's a sandwich family, right? What are you spending on grandpa or grandma annually? Add that into the dime, and that shows you how much life insurance you need, right? And so it's important to do your dime. But financial needs analysis are free. I'll give you guys, I got some ink pens I brought today. It's got my phone number on it. Some of you have my business cards, and we can do this. We can do it by Zoom, whatever. Right? But thank you, everybody. I hope that we got some out of this. And this stuff in the hands of God's people.
Thank you, Byron. Hey, next week, David Cody's going to be here from Walmart, so it should be really interesting conversation. As always, that was fantastic. Any last questions?
I have a next week, when the speaker from Walmart is here, I'm going to be doing a little extra on the food.
All right.
I have a little extra at the
There you go.
I'm gonna do my baby back ribs,
Yeah.
Whoa!
pulled pork, and there will also be a shrimp cocktail ready.
You need to do that.
So, yes, feel free to invite someone who want a nice.
Right.
Plenty of food. This is all done in my barbecue sauce.
All right. All right, thank you. Make sure to invite a friend.
Yeah.
Get some new, I get some new people in. There are a lot of interesting people at Skyline that would love this class. So I've been talking it up a little bit. Let's all talk it up for next week when David's here. Let me close this in prayer. Lord, thank you for meeting us here. Thank you that we can meet, that we're safe, that we're secure. We pray for our brothers and sisters in Christ in Ukraine and think of them and what their needs might be and how. Thank you that we as a church are part of the problem. This is we go into worship this morning. Speak to us, speak to our hearts, Lord. Pray your powerful name.
Amen. Thank you, everybody.